Hello everyone, this is Dr. Mihir Shah once again with another video. In this video, we are going to solve April 2024 University question paper under the subject Financing Rural Development. Again, a very important video for all the TYBMS M6 student. So in this paper, in this video, in April 2024, whatever practical question had appeared, all that we are going to solve in this particular video. So there were basically two problem sums that had appeared. So let us see how to solve them one by one. The very first question was calculate break-even point from the following detail from plumbing business. Okay, so they're asking us to find the break-even point. Now remember, for break-even point, the formula is very simple. The formula, now there are two, one is in rupees and one is in units. Okay, so what I'll do here is, first I'll just show you all, in simple we'll just note down now BEP. Okay, now in units, the formula is fixed cost upon contribution, and in rupees, okay, in rupee, this is the formula in units. In rupees, the formula will become fixed cost upon PV ratio. So eventually, first we need to find the fixed cost. Okay, now for both the formulas, the very first thing that you require is fixed cost. So let us see now from where all the fixed costs can appear. Now first thing, they are giving you depreciation of tools is 24,000 rupees per year. Then rent per month is given, stationery per month, director's salary per month, assistant salary per month, workman's salary, number of days are 16 and it's rupees 25 per day. All these things together, they constitute to the fixed cost. And thereafter they're giving you certain variable cost. There are two variable costs, and then they're giving you revenues, that is sale, the selling price is given to you. So first what we'll do, we'll try to first find the fixed cost. The fixed cost claim will take from depreciation, rent, stationery, director's salary, assistant salary, workman's salary per month. Okay, so very first working will be based on fixed cost. So depreciation per month is given 24,000 per year. So 24,000 divided by 12 will become 2,000. So 2,000 is dep per month. Rent per month is directly given as 700. Stationery is given 350. Director's salary is 600. Assistant salary per month is 400. And workman's salary was 25 per day, and there are 16 days in a month. So 25 into 16 is 400. The total comes to 4450. That's the total fixed cost. Number one, we have found 4450. Now we need to find the variable cost. I mean the contribution. Okay, we need to get the value of contribution. Now contribution cost, simple formula is sales less variable cost. Okay, I can see sales is 400, variable cost 150 plus 100 is 250. So now I know contribution is sales per unit minus variable cost per unit. So 400 minus 250 is 150. Again I repeat, fixed cost was 4450, contribution came to 150. Now with that we will also find PV ratio. PV ratio mein contribution upon sale into 100. Contribution is 150, sales was 400. So with the help of that we can find PV ratio, contribution upon sale into 100. Okay, so 150 upon 400 into 100, we get it as 37.5%. Okay, we have fixed cost 4450, contribution 150, and PV ratio 37.5. So now we can apply into the formula. The first formula is BEP in units, that is fixed cost upon contribution, 4450 upon 150, which came to 29.66 is recurring. Okay, so it is approximately 30 units. And in rupees, fixed cost upon PV ratio, so 4450 divided by 37.5%, so we get the amount approximately rupees 11867. Okay, so this is how you all had to solve this particular problem sum. So you all can go through it once. Okay, so that was the first question which was there based on break-even point. Now the next question. Okay, I'll read the question first. From the following information, prepare profit and loss account of Tiny Bank Limited for the year ending. They're giving you interest on loan, discount, bill discount, net, rebate on bill discount, stationery, postage, interest on cash credit, overdraft, commission, interest on FD, saving, current, establishment charges, director fees, other expenses, rent, rate, taxes, audit fees, and then they're giving you 3 adjustment. Bad debts is 4 lakhs, provision for tax is 55% of net profit, and transfer to statutory reserve is 25%. Now remember, in P&L, to make the profit and loss account, you require 4 important schedules. That is schedule number 13, which is interest earned, schedule 14, other income, 15, interest expended, and 16, operating expenses. So these are the 4 most important schedules that you'll have to first create. So we'll start with first one, that is interest earned. Now think from the bank point of view, which are the areas from where the bank can earn interest? So if the bank gives loan, so that is interest on loan, so that is number 1, yes, that is interest earned. Bill discounting net, so whenever bill discounting net is given, okay, so that you can see below that as rebate will have nothing to do with the sum, okay, it's already net amount. So bill discounting, okay, that is also an interest earned. Next, interest on cash, see, stationery, postage, these are all expenses, okay. Interest on cash credit, when the bank gives cash credit, it gets interest. Whenever bank gives overdraft, it gets interest, okay. So these are the 4 interest earned areas of a bank, okay. So schedule number 13, interest earned, interest on loan, bill discount is the net amount, cash, interest on cash credit, and interest on overdraft. We add up those values, we get 78,20,000 as a total amount of interest earned. Schedule number 13. You can go through it once. Okay, next other income. तो schedule number 14 के लिए other income में let us check which other incomes are available. So remember, we have whatever we have done. Okay, we have done with 1, 2, 3 and 4. These 4 things have been over. And commission, I can see commission. Commission is an income that comes in other income. Interest on FD, saving, current, these are all my expenses, and other all are my other charges. Okay. So there's only one income, that is commission. So schedule 14 other income, there's only income from commission, that is 82,000. Schedule number 14, only one value. Okay, next schedule number 15 में. Now 15 is all interest expended. Now interest expended मतलब wherever from the bank point of view you need to pay interest. So we as a bank, I need to pay interest on fixed deposit, I need to pay interest on saving bank, and I need to pay interest on current account. So all the 3 things have been noted and shown under schedule 15. Interest on FD, interest on saving account, and interest on current account. Total comes to 38,50,000. Okay, and last, whatever other expenses are there, that comes under other expense mein. So I have stationery, postage, establishment expense, director's fees, other expense, rent, audit fees, and bad debts of rupees 4 lakhs. So all those expenses are under schedule number 16, operating expense, all the office related expenses. So stationery, postage, establishment, direct fees, other expense, rent, audit fees, and bad debts came to 12,22,000. Okay, now once we have done this, now we can start with the actual format of the sum, the P&L ka format. So this is how your P&L format will look. Particulars, number 1, income. Under income we have interest earned and interest other income. Schedule 13 and schedule 14, 78,20,000. See, this amount has come from a schedule 13, okay, 78,20,000. Schedule 14 ka amount was 82,000. Schedule 15 is 38,50,000. And schedule 16 is 12,22,000. All these 4 values will be taken into consideration first. Interest earned 78,20,000, other income 82,000. We add up, we get 79,02,000 as a total income. Under expenditure, interest expended was 38,50,000 and operating expense was 12,22,000. Now, provision and contingency. Now they are giving you provision for tax, okay, at 55% of net profit. So for finding that income on your calculator, 79,02,000 minus your expenditure. These are 2 expenditures, so 38,50,000 minus 12,22,000. So whatever amount comes, that okay, that will be like 28,30,000 into 55%. So when you take into 55%, we will get the value of provision, that comes to 15,56,500. Okay, 15,56,500. Now you add up these three, we get our total expenditure 66,28,500. Again, remember this was 55% of our net profit. Net profit was income minus the two expenditures. On that, take 55%, we got the provision. We add up all the expenditure along with provision, we got 66,28,500. Last net profit, that is 1 minus 2 income minus expenditure, 79,02,000 minus 66,28,500. We get the value as 12,73,500. Last appropriation में they said transfer to reserve 25%. So on this amount 12,73,500 का we take 25%. Okay, and the remaining goes to balance sheet. So 318,375 was 25%. You minus from 12,73,500, and that was the balance which will get carried forward to the balance sheet. Okay, so this is how you all had to actually solve this in a particular profit and loss account of Tiny Bank Limited. Very simple. You just need to make those four schedules. Once that schedules are right, you just have to apply it into the format. Chalo, I hope everyone have understood it. So with that, we will be ending this video here. Thank you.